Hello everyone, this is Ming Jong. Welcome to today's market analysis for the S&P 500 E-minis futures for the session of 11th of August. So in this video, I am going to show you the market recap on the last session and a trade review in the 3 minutes time frame, which I will cover the entry, exit, and the rationale behind. And in this particular review, I will focus on how to avoid early entry by using two filters as confirmation. And going forward, I will cover the bias, the key levels, and also the potential setup for the session later. All right, so let's just get started. So as we can see in this daily chart for the S&P 500, yesterday's session wasn't that impressive, but there wasn't anything unusual or very threatening. The thing that I don't really like about yesterday's price action was the very little upside progress, despite having a very normal volume. So it seems like the trend is a bit tiring, but nevertheless, I did not really see any kind of the threatening action yet. So far, we are very close to the all-time high, which was, I think, is about 3397.5. So, and also look at this gap resistance here, we have already covered. And so far, we have traveled to around 3375. So it's almost like another 25 points, then we'll hit the all-time high levels. All right, so let me just get down to the hourly time frame and I will elaborate a bit more regarding the previous session. So as we can see in this hourly chart here, so yesterday's session was relatively a tight range apart from we're having these two anomaly. So these two candles actually provided a great entry, at least for me, as a spring trade. You can see that I have this dotted line as a prior non-RTH level. And these two levels acted as some kind of the spring type of action with quick recovery on this bullish candle. And subsequently, it just kind of like consolidated within this tight range between 33.45 to around 33.55. And prior to that, the Asian session had a rally here and then followed by a tight consolidation. So pretty much thanks to these two candles, then I had one nice trade for me to enter long and was a profitable trade. But yeah, so far I think there wasn't anything threatening yet. This candle looks quite scary, but the following candle just have a very quick recovery, almost recoup all the losses on this candle. And apart from that, the volume level compared to the past few sessions, I think is quite normal. So we'll just need to see what will happen for tonight's session. And let me get down to the 3 minutes time frame because I will elaborate a bit more on how to actually avoid a early entry, because yesterday there was a early entry, and that could be a bit misleading if we just purely analyze based on the effort versus results and to speculate on the presence of demand and enter a bit earlier. Anyway, let me walk you through here. So as you can see, or you can record in my video yesterday, I do talk about possible long entry upon a possible test or spring of this non-RTH level at around 33, 35. So indeed happened at this level here. So this the hourly candle there looks like a spring type of action, and in this 3 minutes chart it looks perfectly fine with this spring type of trade. So this reaction is relatively sharp and quick. And just within less than 30 minutes, we lost about, I think, close to 20 or 25 points here. So this leg down is very sharp. And I think that's from around 33.50, 52 to around 33.30. So definitely is around 20 points here. And if we just take a look at these two bars here, so this bar had a relatively bit higher volume here compared to the previous bar, which is this bar here. So at that time, I just thought that there was presence of demand because with more effort to push down, and what we get is actually a smaller candle. So if we compare these two candle, we know that there was presence of demand, and indeed, it actually showed it in the next candle here. So we have even little downward progress. In fact, what we get is a demand tail and then followed by a rally up here. So I was a bit tempted to enter a long trade there, but just that it doesn't really fit my criteria. Why? If you recall, I mentioned that there were two things that I'm looking at, two filters. So the first thing that to avoid the early entry for me is definitely this downtrend line. So I have drawn up this downtrend line and just look at where the candle closed. So this candle actually still within has not break the downtrend line yet. And the first thing is very easy. So just draw a downtrend line, and you will notice that if it hasn't commit above or break above this downtrend line, then definitely it's still a no-go. And second filter that I use is just compare the price action, because if we take a look at this bar here, so this is kind of a significant bar here, and it's just kind of recover around, I would say, or just 50% of this candle. So it doesn't really look very impressive. So if we just combine these few candles together, so this is the open and this is the close of the bullish candle. So this will become just one candle like this, and this is the tail here, and we have a bit of the rejection tail above as well. So just take a look at this. It's kind of like a hammer, but this kind of the hammer, if we compare to the previous bearish candle here, it doesn't really look too impressive. So let me just give you another example. So these few candles combined together, if we take this bearish bar, this is the open of this bearish bar, and then we take this close here. So this one was actually my entry just right after the close of this candle. So if we just combine this bearish bar plus this bullish bar and this little candle and also this one, so all these four candle all together, so we just take this, this is the open and this is the close, and this was the candle form, and we have this tail here. So just look at these four candles combined together, and it seems like a huge hammer here. And if we compare it to even this bearish bar or even this one, so this huge candle, sorry, this huge hammer bar here is a lot more impressive. So it actually shows a lot of the demand coming in, as shown in this demand tail here. So definitely this is a better entry. And the second filter, which was the downtrend line, definitely it just broke this downtrend line and closed above that. So my entry was actually at around 33.38, and with a stop a bit wider, somewhere around 33.30, about 8 points. So just based on these two filters alone, The first is definitely the downtrend line. We need to see a commitment above the downtrend line, and the second is definitely to judge the price action. You can combine the candle together, or we can just simply take a look at the last bar commitment to the downside. So in this case, definitely is this bearish bar here. So if we take this candle, it's kind of like about 50%. This one, just a small candle, doesn't really add much. But just right after this bullish bar, it's kind of like recover about 75% or 70%. So definitely you can call all together as a reversal. So by just using these two filters, I think I just saved quite a lot of the bad entry, or I would say it's just an early entry. So this can be acted as a confirmation to avoid the early entry. All right, so let me just get back to the hourly time frame and let's talk about the current market outlook and what's happening with the market right now. So far, I don't really see anything threatening or unusual. In fact, we just had two bullish bar up, and it kind of seems like another bullish day. But anyway, the day is still young. We still need to wait until the U.S. Market open. And for day trading today, so far, definitely kind of bullish, if not neutral. And the current potential setup that I can anticipate should be somewhere around this level based on this non-RTH low and coincide with the kind of the swing high level at around 33.55. So I think upon a reversal around this level, it could become a nice entry for long. So this could become a nice long entry here. So otherwise, we just need to base on the smaller time frame to see whether there is a kind of a smaller structure form in order to initiate some kind of a trade either to the upside or to the downside to trade it down. So I mean, so far I think everything looks very bullish, but anything can happen. We still have quite a few hours to go before the U.S. market opens. But for the potential setup, I'm actually looking at the obvious level, the previous swing high turn support level. Um, Otherwise, probably these two levels can become another levels to watch. Maybe it could have some kind of the uh, test on this bullish bar before it can just reverse up. So this could become another long trade as well. So far, I think I talk about the key levels. Oh, okay, for the immediate resistance level, definitely I'm still watching the same level as yesterday at around 3385 to 3400 level, which is very close to the all-time high level. And for the immediate support level, definitely the swing high level at 3355 and subsequently followed by 33, 35 or 45, which is somewhere around there. All right, so this is the end of the video. Hope you enjoyed it and get something useful out from the video. So if you like the video, just click like and also hover to my name or picture to follow me. Do remember to subscribe to my channel so that you get instant notification of my future video ideas. And as usual, if you have any kind of the comments, suggestion, or trade ideas you would like to share with me, or would just like to let me know what sort of things you would like me to cover in detail, feel free to comment below. I will reply to you. Thanks for watching. I will talk to you soon. Bye bye.